So we're going to have Driving DeFi Forward moderated by Julian Bachelet with Cyrille Pastour, Agne Linge, and Anna Valdes. So give them a round of applause as they come up on the stage.
QR or something. I'm going to introduce the speakers first, and then I'm going to let them start talking. So let's get into it. First of all, we got Agne from DGate. She's the lead evangelist at DGate, an order book decentralized exchange on Ethereum with zero knowledge technology. She also has a master's in blockchain and digital currency. She's a former Binance, and she has also spoken in well-known conferences such as Ethereum Denver, Ethereum Rio, DevCon, and now Ethereum Barcelona. Then we have Anna. Anna coming from the Standard.io. She is the co-founder of the Standard. It's a protocol that enables users to generate stables through asset-backed loans. Anna has a degree in business, postgraduate degree in finance and management. She has created teams from scratch and raised several millions in the past few years for Valtoro. And then last but not least, we have Cyrille from France. He's a co-founder and CEO of Swap Labs. They have launched their AMM, which has revolutionized portfolio management by reducing impermanent loss. He holds a master's in international finance, and before founding Swap Labs, he was working as a consultant for BCG. All right, guys. Should we start? Yeah, you ready?
Sure, let's go ahead.
All right. Let's talk a little bit about adoption first around DeFi. We've seen a lot of adoption, a lot of people coming into DeFi in the past, say, 2-3 years, especially during the bull market. What do you think are the key drivers behind all this growth, and what is the impact in traditional finance?
Sure, I can start. So I'm from DGate now. So DGate is order book DEX with ZK rollup on Ethereum mainnet. So we're using app-specific layer 2 to process the transactions. The goal is to make decentralized trading, on-chain trading, as close to similarity to centralized exchanges. So we see that traders have demand for limit orders for trading order book like they used to do on a centralized exchanges. And for now, we only have the AMMs. But back to your question. So I think AMMs, what they enabled for not only professional market makers to earn money from the pool, so you can see simple people, obviously more people with a bit more income, they were able to become LPs, they were able to participate in the pools and earn fees. I would say towards main adoption, perhaps the colleagues will correct me if I'm wrong, I think there is around 80% of institutionals that are trading on DEXs and 20% only around retail. This is the statistics more or less. I think it has fallen a little bit now. So still the majority of people are trading on centralized exchanges because of the comprehensive features, because of easiness to use, and I think because of security. I think we're still a little bit far away to the DeFi mainstream adoption due to simple features like wallets, right? So everybody is waiting for account abstraction, etc. Gas costs also, they're still quite high for usual retail. So they normally use for DeFi, Polygon or BNB chain. Ethereum mainnet is still quite expensive. So we're still, I think, quite far away to, let's say, mainstream DeFi adoption for everyday people. I would say number one probably is security. And people do not understand, although you say trust the code, trust the on-chain finance, there's very few people that can read the code and can understand what's written in the audit, and they would, I would guess, rather prefer to trust someone that they can trust, the centralized exchanges. So we still have some way to go. What do you think, Cyrille? Or Anna?
Yeah, I mean, I totally agree with you. I think that adoption is still very limited. So if you take the on-chain volumes compared to centralized exchange volumes, I think it's around like 5% of the overall crypto volume. And as a founder in DeFi, my goal is not for DeFi to overtake CeFi, it's to overtake TradFi. So I think that the ambition that we should have is to build a new infrastructure for the whole financial system and not only for the crypto assets. So and so if we compare our adoption to that, I think we're still very, very far from succeeding on this goal. I think with DeFi we've shown that it was possible to run basic primitives like on-chain trading that you mentioned, lending, staking, and run them like in an effective manner and resilient manner on-chain. So that's already a great proof point. And now we need to move towards making the decentralized financial system as good, at least, as the centralized one. So improving gas usage, as you said, improving security, improving also like the financial primitives that we have, because so that's where we focus at Swap. Actually, one thing that we notice is that essentially being a liquidity provider into AMMs usually nets you negative returns with very high risk. So we are here to improve liquidity provision and provide passive and sustainable yields to LPs. So I think we're still very far, but we've shown that it was possible to create something new and better.
Right. I think I agree with you guys, and I think you mentioned that what are the drivers that drove it up until now, right, on your question. So I think like there are a lot of advantages to this DeFi in general, decentralization, like we all know, But I think like the main driver that has drove this tremendous growth, which is very small compared to centralized exchanges, is actually profit. I think like people were like chasing profit, and this has driven it until now. And from now is when we actually can benefit from many other things like security, like the actual things that decentralization also brings, like the lower fees, etc. But I think like most of the people who got to it during the bull, and they all came in and they're like, what? I can make like 10% on a DEX. I'm driving right in. So I think that has been one of the big drivers until now, and then we're working towards having other very positive things and very other drivers bringing it forward, as you guys say, to overtake like actual, finance and not just that bit.
That's great. You guys touch a bit on saying that with DeFi we're not competing against CeFi, but we are competing against traditional finance. What do you think can be done as far as user experience in order to increase that adoption of new users coming into DeFi and Web3?
Oh, I think we are far away from this mentioned already account abstraction. So number one, the wallets that are required to interact with decentralized protocols. I mean, even us, we are crypto users. We all have some stories to say. We forgot something or something was hacked, etc. So it does not. This kind of wallets does not instill trust even to yourself, right? So I think this is the number one step, and we're waiting for the wallets with account extraction. I think there already are some interesting options, and not sure. I think maybe liquidity fragmentation, could that be also something that we could solve if all DeFi would become one liquidity pool that we can all interact with? Perhaps that would be easier for both LPs and for traders to get correct prices, etc. Yeah.
Should I go? Yeah. Okay. So as you said, like we're very far away from actual, general adoption, mass adoption, and I agree. Like user UX, everything is like super important. We always talk about like grandma friendly, right? And even this to try to make our products grandma friendly, so everyone can actually do it. We have wallets that work great, but even this morning to get here, I had an issue. I couldn't connect my wallet, so it's still very far away from being from the average user. And one thing that I personally believe it will drive much larger adoption is if we can make products that interact with products that people already use. So I know this is an out there idea, but like payment methods on communication networks like WhatsApp or Telegram, something like that. Then people are already using that every day. So then people will most likely use it because they want to send money somewhere. If you take the case of Spain, maybe you guys are familiar with Bizum. Like this was created by banks, and you're already using your bank every day, but they just made it super easy for people to send money to each other. So I think like if you could connect that with something that people are already using, even better. Like that would actually bring it to many, many users that cannot even think of downloading MetaMask right now.
Yeah, to build upon that, I think there's a general question, which is, what are we building currently? Are we really building for like end users? Like, do you think your grandma is going to bet on shitcoins on chain? Do you think this is the goal? or we're building like infrastructure that people are not going to even know that they will use. And I think it's more the later that is going to drive long-term value creation. So that's why I think like the big steps right now are more around like really, I mean, first ensuring that we have faster blockchains with lower fees. That's going to be much needed. Account abstraction, of course, is related to that. Solving custody and security, and then just building better financial products so that the people who are power users of financial products, which means the finance industry, think that it's better to use DeFi than the traditional financial system because they can have lower fees or whatever, or more efficient capital usage. And I think this is what will drive real adoption in the long run.
All right. Thank you, guys. I do believe that understanding how collateral works in DeFi, it's a crucial part of DeFi, right? Can you, Anna, walk us just a little bit how collateral works in DeFi protocols?
Sure. I'm happy to explain also like collateral and how we do it at the standard.io. So, I mean, collateral is mostly for lending and borrowing. It's also a key part because it's basically what mitigates and reduces the risk of liquidation and of like not repayment of something that is borrowed, right? So how we do it, for example, at the standard, where we have a protocol that allows people to mint their own stable coins based on collateral. So basically they're over-collateralized and they can mint a stable coin that is paired to euro in this case, or it could be any fiat currency. So one thing that can happen, I don't know if you guys have like borrowed with using DeFi before, but like for example, if you have an Ethereum position and it's going down because the price is going down in some sort of bearish market, that you can actually liquidate that position. So that's something that you wouldn't want to do. So one thing that we have actually at the standard is an auto swap collateral. So if you have actually a smart contract and a vault where you have kept this, you can actually swap it into something else that's more stable. And in this case, it could be something paired to physical gold or anything else, anything that could be like that. And another thing that we do also in terms of management of collateral is that you can actually your debt, so your collateral and your debt, they are an NFT and they're a dynamic NFT that you can actually sell on OpenSea to someone else if you need instant liquidity.
All right. I know that some may say that well-designed stablecoins are the most important element in DeFi. No? We've seen a bunch of things happening with USD. We've seen some DPEGs, with USDC being the last one. What do you guys feel about decentralized stablecoins?
You want to start, should I?
I do not have a strong view, but I do share what you said. It is super important. I know there is a fight in the stablecoin world, and it's a very, very necessary tool. But I do not have a strong opinion on decentralized stablecoins.
Yeah, me neither. I guess it depends mostly on the mechanism, and yeah. I guess they're obviously more resilient if they're decentralized. But probably, Anna, you have a more educated opinion about it.
Yeah, I mean, stablecoins are very important for several reasons, right? They're a great store of value. So, compared to other things that are fluctuating in price, they actually are very good for exchanging as well, and as a way to also try it back to traditional finance, because it's very easy to understand this is the value of a fiat currency, right? Rather than other things where for traditional finance people maybe not as easy to know where the value is created. So in that, actually, we have run Voltoro, which is a precious metals and cryptocurrency exchange since 2015, and that for us, it was the first hedge. So people will have crypto, and we want to put it on something that wouldn't be fluctuating in price so much, and they will do gold. So for us, gold is sort of the OG stablecoin. And from that, we've also developed at the standard.io this stable coins that actually are over-collateralized and backed by physical or digital assets. And those actually, sorry, I missed the point of the stable coin. Oh, the mechanism, there we go. All right, so because they're over-collateralized, they're not relying on these sort of mechanisms like we have seen in the cases that you meant, where they're circled, they're fractional reserve, and then one is feeding the other. One element of the stable coin that is backing it is feeding the rest of the mechanism, and it's basically just a badly designed financial product, which is what is at a bigger scale is going to be failing. So that's why, like, for example, the difference for us is that it is over collateralized. So, you know, the value is there, and it could be in physical and digital assets.
All right. Thank you, Anna. We know that on-chain trading is still much more expensive than off-chain trading, right? And what do you see as the needed improvements, and where do you see the future of AMMs and DEXs?
So actually, on that we have a thesis at Swap that we have for over 2 years now. So what you see with AMMs is that they introduce, like, basically they try to serve two users, right, at the same time. They try to serve traders to give them the best price to trade, and they try to serve LPs by giving them yields or yield opportunities. And essentially we think that it's not possible to address those two users at the same time because they have conflicting needs, essentially. Basically, if you want to serve the LPs, you want to charge as much as you can to the traders, because the more you charge to the traders, the more yield you're going to make as an LP. And of course, I mean, if you're in a closed system, right? And if you're building for the traders, well, you want the fees to be as low as you can. And so the LPs are getting no yield or losses, like actually it's the case on traditional AMMs today due to impermanent loss. So what we think, and it seems to be confirmed by the market, and I don't know if you followed the recent announcement of Uniswap before, but what we think is that the market is going to split between what we call exchange layers and what we call market-making layers. So essentially, an exchange layer is focused on traders, and the purpose of the exchange layer is to build the architecture so that market makers can operate on and compete for trading volume, so that the spreads get lowered for traders. And a market-making layer, which is what we focus on at Swap, is purely focused on LPs and providing them with the best yield opportunities. So Uniswap v4, for instance, is a move towards being more an exchange layer, which means like they're dropping a lot of constraints on how the market making should be done, which gives more expressivity for market makers, essentially. So we think this trend is going to continue. And we think this is for the best, because in the end it's going to allow both LPs and traders to serve better their objectives. I don't know if you have what's your opinion on that?
Yes, I'd also like to take this question. So you said on-chain trading is still expensive, and what is the future for AMMs? So on-chain trading means, let's say, trading on Ethereum mainchain. It is still expensive right now, and we are happy that the layer 2s have finally taken off, and it's much cheaper. Obviously, it would be great if it were much more cheaper, because we see already congestions on layer 2s, but nevertheless, it's already great moving forward. Also, zero-knowledge technology have really eased these things up. And we have AP 4844 upcoming. Correct me if I'm wrong, I think it's in the last quarter of this year, which will reduce the gas cost by to 1/10 of what it is right now. So this is a great step to adoption. But I'd like to reiterate what we do at DGate. So the DGate protocol is based on-chain, on Ethereum main chain. However, the transactions are processed off-chain in a app-specific layer 2. So if anybody have used DYDX, it's for trading perpetual. So DGate is a similar concept, but for spot trading. So we focus on Ethereum pairs. And traders can interact in a very similar manner as they would interact on a centralized exchange. They have limit order, you see the order book, but everything is much faster and much cheaper because the transactions are being processed off-chain, and only the ZKP proof is being submitted to on-chain regularly. Right, so these kind of innovations enable us to see the future for on-chain trading, because we all in blockchain and in crypto ecosystem, we understand that trading on-chain, trading on blockchain is already transparent. We don't need to trust anybody. We all seek for trustless systems that we can trade on. And eventually we'll get there, but we're still in the early stages of all the blockchain and Ethereum development, and all of these components hopefully will make it possible to trade.
Can you briefly share a little bit how lending works and how that affects and how it affects and what are the benefits both for borrowers and lenders?
All right. You want to go ahead? Or
So essentially in DeFi, the way it usually works is that you have lending protocols, I mean, the most OG ones are Aave Compound, for instance, where you can deposit collateral, and in exchange for this collateral, you can borrow another asset. So, for instance, it lets you keep an exposure to ETH, but borrow, farm stablecoin strategies on chain, for instance. That's a use case. And more we're seeing new type of protocols developing in the lending markets, some of which are uncollateralized. So Maple, Atlantis would be examples of that.
Okay, and where do you see some complexities in the lending protocols?
Sure.
No?
So I mean, go ahead.
I'll jump.
Yeah, so I would say the major one is risk management. So basically, when you have a collateral, there is a risk that the collateral drops in value too fast and is not able to cover the amount you've borrowed. In order to prevent that from happening, you have a process which is called liquidation, which is basically enforced to liquidate the collateral if it starts falling too low. The problem is that sometimes the collateral is not liquid enough. So, for instance, let's assume that you deposit the latest shitcoin as a collateral in a lending protocol. The issue is that if the quantity of the shitcoin is too large, you're not going to be able to trade at the market value. There's going to be a huge price impact. And so essentially the collateral is going to be worth way less than the amount you've actually borrowed. So that's the biggest risk. And that's why many assets, you're not able to deposit a lot of assets on Aave or Compound, essentially.
Yeah, I think also on some of those platforms you have sort of two parts, the borrowers and the lenders. So the lenders are actually putting in fiat, for example, and then getting a return every year, right? And that's where actually sort of the interest rate that people have to pay back for the crypto that they actually took when they did the lockup of the assets. So, I mean, definitely, as you mentioned, liquidation is a total issue, and that's for example, as I mentioned in the standard that we have auto collateral swap, so you can actually swap before it actually gets not liquid or so bad or so close to the liquidation limit. Also, as I mentioned, because there will be a part where there are lenders and there are borrowers, there's an interest rate, and that's also something that we don't have at the standard. So of course there are fees to open and to close as a smart vault, but there's no interest rate. So if you actually deposit some and lock up some assets, and you actually borrow in a stable coin that's pegged to euro, when you go to pay back because of inflation, you're actually paying back less value. So instead of actually having interest rate, you will probably be, essentially paying less, and that you will actually not pay with inflation. So those will be some of the concerns, definitely liquidation, interest rates, and it could also be, for the lenders there are also other sets of issues, but yeah, that would be on the borrower side. Yeah.
All right, thank you. The three of you guys work in DeFi, and I know there's a lot of conversation about growing DeFi, right? And becoming DeFi the next big thing on Web3 and stuff. Where do you see, and do you even see there's a space there to grow DeFi to support other traditional assets, elements?
I do think there is, definitely. I studied finance myself, traditional finance and financial markets, and we studied how to price derivatives, fixed income products, etc. So seeing that all the complex financial instruments, derivatives are, let's say, a construction of future cash flows, etc. Definitely, I see a lot of opportunities, and I'm looking forward to very serious people, structured product people, they dive into that and have a look what we can do here. So I do think it's very interesting opportunities, but I would also like to talk to them, to those structured product people, because I'm sure they already investigating what could be done. But still, I think DeFi is pretty small industry compared to real traditional markets, TradeFi, with which we are competing. Yes.
Yeah, I totally agree. I think that today what we're trying to do is essentially run Netflix on like the internet of the 90s. So essentially, our system is not ready, and we are just building it. So we don't have the regulation, we don't have the infrastructure, an infrastructure that's fast enough, we don't have products that are good enough. But I think it's good to be iterating on the system. And yeah, I think the sky is the limit. Like there are many more assets in which we can expand. Real-world assets, for instance, are starting to gain traction right now in DeFi. And as you said, like much more complex assets as well, asset classes as well. So yeah, I think just the sky is the limit, and we should not put any limits. It's just it's going to take time to improve the infrastructure and the overall environment on which we're building upon.
Yeah, I think traditional finance doesn't sometimes have a lot of incentives to work with decentralized finance. So I have encountered some resistance from like, people in traditional finance to want to implement those systems because they do have systems that work. And as you said, it's like also it could be the internet of the 90s, but still like those are systems that they know, and then some of the advantages might not apply to them immediately. So they might not want to build on that. I think a lot of the work that we're doing is also replicating things that are in traditional finance, and we're still very far away from the actual use cases that are going to come. So if we listen to users and their problems, that we can actually develop DeFi-specific solutions to those problems that might not even have a reflection on traditional finance. So on that, there's still a lot to be developed for sure.
All right. We touched a bit previously on network congestion, right? And what do you think protocols can still do in order to accommodate a higher user base in order to perform all those transactions?
Scalability, right? So layer 2s, then proto-dunk sharding is coming. The storing on blockchain will become cheaper, right? So I think we all in Ethereum working towards scalability and accommodating more transactions. Previously, we always like to compare how many transactions per second Visa can process and compare it to Ethereum. So I think we're coming close, but it is much more complicated technology to do everything on chain rather than to have a centralized server. We all understand that.
Yeah, I guess it's more on the infra side than on the dApp side, I guess. Even though like new features like account abstraction, for instance, are like going to abstract the complexity for the user and can be implemented on the dApp end.
Yeah, at the protocol level, I see like it's quite hard. It's sort of more like core development, and of course layer 2 sharding, all of that stuff. Yeah, I'm not too sure of technical things that protocols can do. Of course, they can try to take less as resources, but I think like definitely there's some bigger changes that have to happen, at the core level.
I think protocols should focus on security, especially DeFi protocols. This is super important. So no matter how many users you're onboarding, it's very important to ensure security for that amount of users. Yeah.
All right. Do we have any questions? No. All right. We've seen a lot lately, a lot of issues with the regulatory aspect of crypto, right? Especially in the US. What do you guys think are the regulatory considerations that a protocol needs to have in order to be successful in this DeFi space?
Mm-hmm. Yeah, of course we have MiCA coming in general crypto regulation for the EU. Everything's out, it's coming next year, but there are a lot of questions unanswered about how is it going to be implemented, who is going to be overlooking it, what exactly, how exactly it's going to work out. So there's a lot of things to work out and a lot of space there. We have to keep it in mind, but we don't know how it's going to affect protocols just yet because we don't know who's implementing it, right? As I'm coming also from centralized crypto before, there are a lot of changes that we didn't think even were going to be possible. I'm talking 2015, back in the day where there was no KYC, for example, in centralized exchanges. So we had to implement KYC, AML, all of those rules at the time seemed like they were not going to work, but they will still work. And the thing is, no one actually wants their protocol to be used for bad things, right? No one wants to actually be like having you know, cash or like a crypto that comes from places that you wouldn't want that to happen. So obviously we all want security even for, you know, our protocols, and we don't want to be completed with our illegal activities. So there are a lot of things to work out and a lot of details up in the air. So it depends on exactly what your protocol does. So, you know, if you can fall into one of the things that are coming under the current law or not. But definitely with, like, you know, if you want to work with integrity and you want to implement those things, and even though there's not going to be like immediate supervision, that you still want to consider how that's going to play out in the future.
All right, cool. We got a question here. Is that what's your opinion on chains as Arbitrum Optimism overtaking Ethereum chain?
Well, I mean, overtaking. I would actually like to comment.
Big word.
So overtaking, is it real usage, or is it airdrop hunters? You know, so we're really waiting for utility. I'm actually not sure about the TVL currently, but I know that Arbitrum did very well. In fact, I would say Ethereum is like a country, and all the layer 2s are like cities, right? So still Ethereum, all these layer 2s, they derive security from Ethereum main chain, and this is why they are layer 2s that are secure, right? So still I think Ethereum is the master of everything, right?
Yeah, no, I think it's also part of the Ethereum vision to become a kind of settlement layer for those like layer 2s. And yeah, today Arbitrum Optimism have gained a lot of tractions over the past year. I think this is not like where it's going to continue with ZK rollups that are coming and starting to be deployed. And yeah, I think it's for the best. Like we cannot have a financial system that is run on like 10 TPS. It doesn't make any sense. So yeah, I think it's for the best for sure.
Well, I can tell you that we have a test version of the standard.io on Arbitrum. So that's, you know, like we have jumped on the bandwagon for us. So it does work for us, and it works for what we want to build. So that's where we actually have it. So yeah.
All right. Thank you, guys. We have a question.
Yeah. Thank you all. I don't know if you really know about this, but I'm seeing that new ERC is announcing. ERC 7265 circuit breaker that is fixing the biggest problem with DeFi security, lack of response, time to mitigate hacks. Do you know about that?
I do not.
I briefly heard about it, but I didn't have time to deep dive on it. But
yeah, I haven't.
But I mean, obviously, like I don't know if
it's like a circuit breaker.
Yeah.
I don't read it. I'm Solidity the developer, but I haven't read it yet. But it seems like a circuit breaker, something like some type of circuit breaker that change the when a hack occurs, try to mitigate that hack. I don't read it yet. It's just a question for you guys if you know about something like that.
No, but definitely worth looking into. This is why we're here, to learn from each other, right?
Yeah, right.
All right. If we don't have any more questions, I'm going to move on to our final question. And I think it's about safety and being smart and security, right? We've seen a lot of hacks in the recent years, especially the ones being in bridges and with breaching assets and stuff. What do you guys think DeFi protocols can still do? And Agne, this is something that you touched previously, right? The importance of being safe out there. What do you guys think DeFi protocols can still do or are doing, especially your DeFi protocols that you guys work at, in order to improve the smart contracts that are running everything?
Sure, thank you for the question. So for DGate protocol, the safety of the protocol is an utmost security. This is #1 priority. Specifically, DGate has 1.11 million bug bounty running with Immunify. So we will reward a white hacker who will find critical vulnerability with this amount, focusing on this. DGate has gone through at least three audits to ensure the security. We understand that for the user to trust a new protocol, this is number one. So someone who is deep into DeFi, who has friends who can check the code to understand, that's fine. But for user, he has to trust third parties for the protocol. So let's say that's why Uniswap is so trusted by everybody. It has already proven over time that it can be trustworthy. So all the protocols have to seek to earn the trust among the users and obviously ensure the technical security levels. Yes.
Yeah, for us it's also like a priority number one for sure. So I mean, the traditional response is of course like security audits. So we've been audited by chain security, runtime verification, QuantStamp, so many prestigious auditing firms. I think we should also be creative, and what you mentioned about the circuit breaker is a good example of that. I think there are ways to implement security on chain, and that we should try to be more creative around that. So what we are doing with our V2, for instance, is that we're implementing a kind of max on-chain drawdown. So essentially, the idea is that so our product is an AMM, so people deposit liquidity, and it allows other people to trade. And so what we have implemented on-chain at the smart contract level is that if the pool loses more than a given percentage of assets on a single day, it will not be able to trade anymore. And so and each time like we are trading, before the trade we're simulating the performance of the pool post-trade using oracles. And so essentially this enables a kind of stop loss for LPs on-chain, which would be useful in the event of a hack as well. I mean, depending on the specific type of hack, but so yeah, I think we should be more creative around ways to provide on-chain security standards.
Yeah, great feature. I agree with you guys completely. Of course, security is at the center of everything that we do, and it's our focus. And on top of audits, of course, that we also have through our code, I think, as the example also as well, like there are new vulnerabilities that are still popping up and that we don't know about. So it's like the continuous check on security, and that we keep doing it and keep auditing and keep figuring out if there's new vulnerabilities on the smart contract that we didn't know were possible like before when we first created it. So definitely that will be like, you know, keep security as a very much part of it, and keep reviewing it for new things that are coming.
Actually, I would add one thing from a user's point of view. Everybody knows that smart contract approval, very simple thing, right? So whenever you interact with the DeFi smart contract, do not forget to revoke your approval, whatever you do. So this is something from a user's perspective, yeah.
All right, thank you guys. Do we have any more questions?
Thank you. It might be a terrible, simple question, but I heard what you were thinking about and saying about real-world assets, and as well for well, derivatives and other structured products. I used to work in this field, and it's very interesting for traders in TradFi. However, one of the big issues is still more on the law enforcement, and if you look at any term sheet in a structured product, it's going to be 10 pages of what happened if someone is going to be misleading, or, I mean, you need to get your investment back, or in case of real-world asset, if you're going to use uncollateral loan for, let's say, a real estate asset, but the contract and the transaction is actually unlawful, or there is no way to enforce today, and even if the transaction on chain, the code is correct and financially it makes sense, in the real world, the risk of the real world is going to be impossible to enforce something. Do you see today in the regulation at your level of well, entrepreneur and builders in the field, something going toward a more fluid way of well, building and making it more possible to ramp up this kind of transaction? Or?
Mm-hmm. I think that situation differs from country to country, jurisdiction from jurisdiction. It's also to add to your question about regulations. America, Europe, they have some regulations that are strict. It's totally different for some regulations in South Korea, for instance, or in many Asian countries, or in Middle East, or in Dubai, right? So we still have a lot of arbitrage in jurisdictions. And getting more specific to a question, so financial innovation, I would guess, that would be my guess, that some financial center like London or Paris, they would tackle this issue to address if there is enough monetary, perhaps, incentive that they see in the future to gain. Or optimization, perhaps, yes. But right now, I think for DeFi, we don't have any guidelines in Europe, and for this particular MiCA, right? For DeFi, no.
No.
Right.
For instance, just to be sure, but like the biggest beneficiary for any strong DeFi uncollateralized loan will be like a cocoa farmer in Ivory Coast, and technically it should be the biggest yield. So the summer of yield is going to come back in DeFi if you make that possible. However, like enforcing a bad farmer of cocoa field who actually is a massive prince, African prince, is going to run away with the money. How can you? I mean, it doesn't exist yet, but how do you see any possible way of amending contract or making international regulation in place for well, that's one of the biggest risk factor basically. So how can you reduce it or make it in pricing in the contract? I don't know.
That's a very interesting
solution on that,
very interesting question, and as you say, this is international, right? So if you are a trader, I don't know, in London, and if you're dealing with cocoa farmer, which is in Brazil, but also I would like to ask a similar question. When you trade futures of pig cattle, you don't settle physically the cattle, right? You only...
If you wait for expiry and you're bold enough, you will, but yeah.
So yes, and I think this question would go also from technical to legal side. We need composability in international standard, and we need composability in the protocol. So it's not enough to have liquidity on one chain, another chain. And so we also don't know institutionals, financials, what chain they will choose. Maybe they will choose some permissionless chain, the permission chain, to construct all of these things. So it would be interesting to continue this discussion in person.
All right, we don't have any more time. Is there any more questions? Do you have time?
It's more a comment than a question itself, but I like to understand your position. So it's about education, right? So CEXs, central exchanges, they are doing a good job because they have easier UI in terms of training, in terms of like financial education of people, right? But I see a gap in a lot of decentralized and DeFi protocols that they are not doing such an effort to introduce users to that world, and I see that there is a huge gap between and CEX, they have it easier. UI is much more beautiful. They have a lot of, let's say, pros on that. But what is your position on bringing this bridge into teaching people what is AMM, what is MMM? What is lending, what does it mean, an escrow score, all these terms of concepts that I don't see it in DeFi protocols doing such a good job that the CEXs are doing for their side. Right? I just like to understand your position there in terms of financial education. Thank you.
Sure, it's a very important comment, and I think most protocols are trying to do explanation in the ways that they understand. Some protocols are more technical, so they're explaining it in technical ways. Some protocols are trying to reach more retail, or for some, the users are LPs, like for SWAP, so the education is different. But I totally agree with you. The centralized exchanges, they are so comprehensive, and they have step-by-step to do, like the guiding you by hand, really how to do everything, and we can definitely improve on that. But also what we hear quite often in DeFi is that, oh, we need to build such a product that people don't know that you're actually using DeFi. So it has to be so simple that you're just using a browser. So maybe, are we going to educate first now in this complex situation and people will get lost, or will we wait till this new era of easy UI, etc.?
And to be honest, I feel like the complexity is more on interacting with the chain rather than on the protocol level. Because I mean, what's difficult to understand and painstaking for a user is like to set up your own wallet, like to try to avoid hacks or whatever, have the custody of your funds. That's, for me, that's the real UX barrier. Like trading on Uniswap or on any on Magpie or D8, I don't think that's harder than on Binance, to be honest. Once you have a wallet, it's pretty straightforward. So it's more like all the interactions with the blockchains that are maybe more complicated. And I sincerely hope that new techs like account abstraction are going to enable us to deliver better on this end.
Yeah, at a protocol level, we keep putting content out. So we do have, YouTube, and we have blog posts and everything. I hear that is not, getting to the right place. So that's something we can always improve on. But definitely, education is at the core, even though we might not, be as effective as we would like right now.
Right. We don't have more time. I want to say a big thanks, the three of you, sharing insights, ideas with us, answering questions. But yeah. Hope to see you again.
Thank you very much.
Thank you for having me.